Well, it is a sea of green out there on Wall Street this morning. I mean, the optimism is running really high. But, don't get too comfortable just yet. There is a major event coming up at 10 a.m. that could stop this entire rally dead in its tracks. So today, we're going to break down all the forces that are driving the market up and the one big obstacle that's standing in its way. Let's get right into it.
So, the big question on everyone's mind has got to be what's behind this bullish mood, right? After all this uncertainty, what has suddenly got traders feeling so confident all of a sudden? Well, the answer really comes down to this perfect storm of three powerful forces, all hitting at once. First, you've got the American consumer, who just refuses to stop spending. Second, we've got some really welcome good news from the world stage that's easing some major tensions. And finally, companies are reporting some seriously impressive earnings. Okay, so here's our game plan for today. We're going to start with the foundation of this whole rally, the unstoppable consumer. Then we'll look at the good news from overseas that's fanning the flames. After that, we're going to turn to the main event, the potential party crasher here, the Fed. And we'll wrap it all up with what you need to be watching for the rest of the day. All right, first up, let's talk about the real engine of this rally, the strength of the U.S. consumer. I mean, this is the absolute bedrock of the market's optimism right now.
So at 8:30 this morning, we got a blockbuster number. Retail sales in March surged by a whopping 1.7%. In an economy that's driven by consumer spending, a number like this isn't just a green flag. It's basically a rocket launch. It tells us that people are out there, they're feeling confident, and they are opening their wallets.
And this slide right here really puts that 1.7% number into perspective. It didn't just meet expectations, it totally shattered them. Even the control group, which is a more core measure of spending, came in hotter than anybody anticipated. This is exactly the kind of data that fuels that whole no landing scenario. The idea that the economy can just keep soaring without a slowdown.
And this isn't just a story about the big tech giants either. The Russell 2000, which tracks the smaller U.S. companies, just hit an all-time high. When you see the small caps thriving like this, it's a really powerful sign that this economic strength is reaching every corner of Main Street, not just Wall Street.
And, at the end of the day, it all comes down to earnings. Just look at United Health, a major component of the Dow, jumping over 7%. They didn't just beat their earnings estimates, they actually raised their forecast for the future. That is a huge vote of confidence. And we're seeing similar strength over in the energy sector with Halliburton. Strong profits like these, they're the lifeblood of any bull market.
Okay, so the U.S. consumer is strong. We've established that. But that's not the only thing driving this rally. Let's turn to our second pillar of optimism, positive news from the global stage. Because, as we know, what happens overseas rarely stays overseas. Now, this is the big one. Overnight, news broke that high-level diplomatic talks are underway in Islamabad, specifically aimed at de-escalating all those tensions in the Middle East. Markets absolutely hate uncertainty, so any sign of a path towards stability in a volatile region is seen as a huge, huge positive.
And here is the direct result. That war premium that was baked into oil prices is just evaporating. Crude has pulled back significantly from its recent peaks. Now, for the market, this is a powerful 1-2 punch. It signals geopolitical calm, and it helps ease those nagging inflation worries. And the positive vibe is global. Over in Asia, South Korea's KSPI index hit a new record, mostly thanks to just incredible demand for AI chips. Meanwhile, in Tokyo, the big tech investor SoftBank surged on the strength of its AI-related holdings. This just sets a fantastic tone for U.S. tech and semiconductor stocks as our trading day gets going.
Okay, so we've built the bullish case. We have a strong consumer, we've got good news from abroad, solid earnings. But now we come to the day's biggest hurdle. The one thing that could spoil this whole party, the Federal Reserve. Now, before we go any further, let's just define a key term, hawkish. When a Fed official is hawkish, it means they're worried about inflation and they want to tighten financial conditions. This can mean higher interest rates or shrinking the Fed's balance sheet, a process we call quantitative tightening, or QT. Just think of QT as pulling money out of the financial system, which is usually a headwind for stocks. And here's the crucial point for today. Fed Chair nominee Kevin Warsh is set to testify before the Senate this morning. And according to Bloomberg, the expectation is that he's going to take a very aggressive, very hawkish stance. The market is basically bracing for him to call for an even faster pace of that quantitative tightening. This timeline puts it all into perspective for you. We've had the good news already from that 8:30 retail sales report.
Now, all eyes, literally all eyes, are on that 10 a.m. testimony. This is the main event. This is the single biggest potential source of volatility for the entire day. So as we head into the thick of the trading day, let's just wrap up with a quick look at the key things you should really be keeping an eye on.
And hey, while we're all focused on the big picture, here's a quick reminder that even on a super bullish day, company-specific risk is very, very real. Take Fermi, a robotics firm. The CEO and the CFO both resigned this morning, and the stock immediately plunged 18%. It's just a stark reminder that headlines can create huge volatility for any single stock at any moment.
Now, for the broader market, these are the key levels that traders are watching for S&P 500 futures. We're currently trading just above that overnight low. The big question is, can all this positive momentum break through the resistance at the pre-market high around 710, or is a hawkish testimony going to send us right back down to test that next support level around 704? And that really brings us to the final question of the day. We have this powerful no-landing narrative that's being driven by a strong economy and some really happy consumers. But can that optimism survive a Federal Reserve that might be about to get even more aggressive in its fight against inflation? That is the tension that's going to define the rest of today's trading.